Toronto's condo inventory keeps climbing. Right now, we're sitting at just under 6,000 units on Toronto's MLS. Now that's lower than the peak, but it's rising fast, and over 50% of those units are under 800 square feet. So it's no surprise that investors are struggling to offload them, but buyers aren't necessarily desperate to get in either. So the question is, how did we get here? And more importantly, how do we get out? Because if we're waiting for a flood of new buyers to scoop up these 600 square foot family homes, we might be waiting for a while. All right, so here's where things stand today. Toronto's condo market is flooded with inventory, and over 50% of what's available is under 800 square feet. So very clearly, these aren't homes for families. These are investor specials. But the real question is, why aren't these units selling? Normally, when inventory piles up, buyers jump in to take advantage of better deals. And while some are just doing that, we're not seeing a full-on rush to scoop these units up. Why is that? Now, when you break down the cost, these condos still don't make financial sense. Not for investors and not for first-time buyers. So let's talk numbers. The average one-bedroom rent in Toronto is about $2,400 a month. Meanwhile, if you buy a one-bedroom condo and put 20% down, your mortgage will run you around $2,200 a month. Sounds reasonable, but the math is tight. Now, most first-time buyers aren't sitting on hundreds of thousands of dollars for a down payment, and most are only putting about 5% down. So at 5% down, that same unit costs over $2,600 a month, and that's before condo fees, taxes, or insurance. So it's not surprising that investors are looking for an exit, and the people who actually need these units, they're not necessarily clamoring to get in. So how did we end up with all these tiny overpriced condos that nobody wants, but everyone actually kind of needs? So number one, developers built for investors, not end users. For years, developers weren't building condos for people to live in. We've talked about that multiple times on this channel. They were building them for investors to rent out. The focus was on maximizing profits per square foot, not creating homes that you could actually put roots down. Number two, prices stopped making sense. So for a while it worked, prices kept climbing and investors were making money hand over fist. But now, prices have stalled, interest rates are up, and suddenly the can't lose investment isn't looking so hot. So the third thing we have identified is one bedrooms are a tough sell. Here's the kicker. Even if prices dropped, these units would still be a hard sell. One bedrooms are often short-term holds, and users don't stay in them long-term, and investors are now questioning whether they even make sense. Lastly, short-term rentals got shut down. So let's not forget another massive shift. The crackdown on short-term rentals. When the city made it harder to rent out a one-bedroom or studio on Airbnb, it completely changed the math for investors. A lot of these small condos made financial sense when they could be listed as a short-term rental, but now you can only rent out your primary residence on Airbnb. That restriction cut off a major revenue stream for investors and left them scrambling to make the numbers work. So, how do we fix all this? Option number one, let the market crash. So what if we just let prices tank? If condos get cheap enough, eventually the numbers will start to work again. And to be fair, this is kind of happening in some pockets of the city and some buildings, but will that actually help? Even at lower prices, one-bedroom condos aren't exactly hot commodities. They're still not ideal long-term homes, and reselling them even in a good market can still be tricky. Option number two is reverse the foreign buyer ban. Now, here's where things get spicy. Like it or not, foreign capital played a huge role in Toronto's condo market. And when we locked out foreign buyers, we removed an entire group of investors who were happy to scoop up these small investment suites. Could bringing them back stabilize the market? Probably, but would it be politically popular? Absolutely not. Option three is get institutional investors involved. So what if we got pension funds and REITs to start buying individual condos instead of just investing in purpose-built rentals? On the surface, it makes sense. The problem? If they haven't done it already, there's probably a reason. It likely just doesn't make financial sense for them to do it. But in a world where rental demand is still relatively high, maybe there's an opportunity there. Option number 4, bring back short-term rentals. I mean, right now in Toronto, you can only offer up your primary residence as a short-term rental. Investors, they're out of luck. But what if the city adjusted this rule instead of outright banning it? Imagine allowing short-term rentals on non-primary residences, but with an extra tax or licensing fee. That way, instead of pushing investors out, we actually generate revenue for the city. Other cities have done this, and it keeps short-term rental supply flexible without killing affordability in the long-term market. Option number 5, fractional ownership. Now, I know this is a wild card idea, and I know this is kind of getting weird, but what if instead of buying an investment condo alone, you bought it with 10, 50, or even 100 other people? This is called fractional ownership, and while it's not common in Canada, it's something we could explore. So instead of taking on debt, people invest together and share rental profit. We create a whole new market of potential investors to snap up some of this extra inventory. Now, it's a small return on this investment, but it's a lot more palatable than dropping $500,000 solo, and I think there could be a market for that. Now, I don't want this video to come across as me advocating for large institutional investors or foreign entities to take over the condo market. Far from it. What I'm saying is that a lot of the investor-focused product out there shouldn't necessarily be the burden of end users to purchase and live in. Ideally, investors should be the ones snapping up what's available, and then we put pressure on the city to push developers into building more end user-focused homes, because at the end of the day, if we keep churning out the same small investor-friendly units, we're just going to end up in the same mess again in a few years from now. So what do you think? Drop a comment below. What do you think is the best way out of this mess? Oh, and if you're contemplating taking advantage of this buyer's market, hit me up. I've been helping clients buy and sell condos in the city for over 13 years, and I can help you navigate whether now is the right time for you to make a move. Oh, and also, if you want real-time AI insights into the condo market, check out Valerie.ca. Asking prices are great, but knowing what condos actually sell for is a real game changer. When you know the real market values, you're better prepared to take advantage of a buyer's market. That's it for now. See you in the next one. Peace out.